Students, I'm actually going to explain you on how to work out the problems under dissolution of a partnership firm. For this, on the board I have put an imaginary balance sheet with imaginary items. We know that on the left hand side we record all the liabilities. On the right hand side we write all the assets of the business. So first and foremost, you need to understand the meaning of assets and liabilities. Assets are those items which have a certain value which is used by the business for its future benefit. Whereas in case of liabilities, liabilities means the obligation of the business to pay in future. So when partners start their business, normally they invest their funds in the form of capital, which we will represent it in the balance sheet on the liability side. So in this question, I have taken A, B and C as the partners, okay, who have their partnership firm and they are going to dissolve it in future. So let us assume it is the dissolution of the partnership firm, and this is the question that we have. Yes, of course, they will give you certain adjustments which I will explain to you in the later part of the video. So there are three important accounts that you need to prepare. So the first account is called as realization account. The second one is called as partners capital account, and the third one is called as cash or bank account. Now, what exactly is realization account? This account is prepared at the time of dissolution. That is point number one. Point number two, this account is prepared to show the sale of assets or realization of assets and the payment of liabilities. The second account is partners capital account. Now we need to arrive at the final balance that we are going to pay to the partners, and this final settlement is done through cash or bank account. So for this, first and foremost, realization account is a nominal account. The rule of nominal account: debit all expenses and losses, credit all incomes and gains. The second one is personal account: debit the receiver, credit the giver. The third one is if it is cash, it is a real account. Okay, debit what comes in, credit what goes out. If it is bank, then it is a personal account: debit the receiver, credit the. Remembering the rules is very important, students. This will help you to solve the problems very easily. At the same time, the core concept of understanding what do you mean by assets, what do you mean by liabilities, it would be very good if you refer to your accountancy first chapter, where you have different terms that you have learned, like for example debtors, creditors, what do you mean by profit, gain, loss, expense and so on. Students, now I will explain to you on how to prepare realization account. So I am going to divide this entire realization account into steps. So the very first step, okay, I will call this as step number 1. For this, you need to follow the balance sheet, which is very important. So first and foremost, whatever the liabilities that are there, okay, that with the book value, you're going to write it as it is on the credit side of realization account. And all those assets which is reflecting in the balance sheet, you're going to write as it is on the debit side of realization account. Now for that, you cannot take all the assets, you cannot take all the liabilities. There are few important things which you need to make a note of it. So first and foremost, for example, if there is reserve fund, to which account it has to go? Partners capital account. If there is anything related to the capital of the partners, definitely it has to go to partners capital account. Okay. In case of profit and loss of the business, that is credit balance, which is given on the liability side, this also goes to partners capital account. Let's say if at all there is profit and loss account, a debit balance is being given, this also will go to partners capital account. So that means simply you cannot take all the items of liabilities and write it in realization account. Likewise, on the asset side, the most important item, that is cash or bank, you cannot take it in realization account. You're going to prepare a separate account which is called as cash or bank account. So that amount what will reflect in the balance sheet will be presented in a separate account which is called as cash or. So as I was telling to you that I am going to divide the entire realization account into steps. So the very first step, what I said, is to take all the liabilities and post it as it is on the credit side. So what are the items that I have on the liability side? For example, I will take few items, students, like creditors or bills payable. The next one is bank overdraft, if there is any bank loan. Okay, A is wife's loan account. A is the partner, but A's wife is not a partner. So therefore you will write it as A's wife's loan account. Okay, C's loan account. C is a partner. Partner is giving loan to the business. Please do not write it in realization account. This particular item will go in cash or bank account. The item is capital, which I have told you, which will go to partner's capital account. Profit and loss will go to partner's capital account. So what you are going to do, the first step is write all the items as it is on the credit side. Nothing but the opposite direction. Now on the assets. First item is cash or bank, which will go to cash or bank account. The remaining items like bills receivable, land and building, plant and machinery, motor, car or any vehicle the business is having. Now in case if you have debtors minus provision for bad debts and provision for doubtful debts. In this particular case, write debtors on the debit side, whereas provision for doubtful debts or bad debts, you need to show this on the credit side of realization account as provision for doubtful debts or bad debts. This is how you are actually going to close the account. The next item being stock, furniture and so on. So whatever the values that you are going to have in the balance sheet, the same values you will write it in step number. Now I am going to explain to you step number 2. Students, we have understood in the meaning of dissolution of a partnership firm that whatever the firm is having, those assets or liabilities, they need to clear everything. Okay, to clear the liabilities, they will sell their assets, isn't it? And that's how they are going to make payment to different creditors, payment towards bank loan, if they have any bank overdraft, all such liabilities will be cleared. So let us assume in the adjustment they have given assets realized, nothing but you are selling your assets, payment of liabilities, liabilities paid, assets or liabilities which are taken over by the partners, and the last one is realization expenses. Now in step number 2, you need to read the adjustment which will speak about assets realized and payment of liabilities. Now selling and payment, all this should happen through cash or bank account. So what you are going to do is in step number 2, you are going to write it as cash or bank account on both the sides. Okay. If you are selling asset, most of the time you are going to get a profit out of it. That means it is a gain to the business. We know that realization account is a nominal account. So on the credit side, what do we record? All incomes and gains. So therefore, all the assets that is being realized is written under the heading by cash or bank account. So what are the assets of the business? For example, you will have bills receivable, land and building, plant and machinery and so on. Just follow the question. On the debit side, you are making payments. So the rule of nominal account says that debit all expenses and losses. So when you're making payment, your cash is going out. So quite naturally, on the debit side, you're going to record all the payment of liabilities. Liabilities that is being paid off. So what are the liabilities in the question? For example, we have creditors, bills payable, bank overdraft. Likewise, you will write the rest of the items. So this is with respect to step number 2. So what you're going to do is you will find out whatever the final amount, you're going to write it in the outer column. You will make a total of all these things and write the final amount in the outer column. Now you have step number 3. For this, you need to read again the question, which speaks about if there is any asset or liability taken over by the partner. Let's say the business is having a motor vehicle and this motor vehicle is taken over by partner C. So asset is taken over. So if asset is being taken over, write it on the credit side as assets taken over by partners. Normally this is recorded in partners capital account. So let us assume the motor car is taken over by C. So what you will do it, you will write it as C's capital account in bracket motor car taken over. So if there is any liability that is being taken over, which is recorded on the debit side as liabilities taken over by partners. Okay, so you will record it in partners. You will write it as to partners capital account. So maybe let's say A is taking over the liability. So A's wife's loan is taken over by A itself. So A's wife's loan is taken over by A itself. So how you are going to write it? A's capital account in bracket A's wife's loan taken over. So this is with respect to point number 3. This will arise only when, if in the question they will give asset is being taken over or liability is being taken over. Now we have the last step, which is the 4th step. For this again, follow the question and find out if there is any realization expenses. Realization expense or dissolution expense. Both meaning is one and the same. So normally if the firm is making the payment will be through cash or bank account. So you're going to write it as cash or bank account. Nothing but you're going to pay all the realization expenses. There is one more scenario under this case. Let us say partnership firm will say that one of the partners should take up the responsibility of dissolution expenses. For this, the firm will give the amount. In such a scenario, instead of writing cash or bank account, okay, you will write it as partners capital account realization expenses. He is going to take care of all the closure expenses of the business. So these are the 4 important steps that we need to remember, students. At the end, we are going to do the balancing. So we are going to find out which side is more. Let's say if your credit side amount is more, then you will call this as realization profit. If your debit side is more, then you're going to get realization loss. Now as per the scenario, I have given you 3 partners. So let's assume we have got a loss in the business. Okay. So this loss is shared between A, B and C in the profit sharing ratio. So this is also very important to make a note. Now that students, we have discussed the important steps while working out realization account, there are a few more things that you need to make a note of it. Okay, which will be posted now in partners capital account and as well as in cash or bank account. Like for example, if on the debit side okay, you have cash or bank account, liabilities being paid. So this cash or bank account, whatever the amount that you are going to get, will be reflecting in cash or bank account. Likewise, on the credit side, you have written cash or bank account for which assets are being realized, and you have found out the amount. This amount will now reflect again in cash or bank account. Now please do remember, okay, we always do the opposite direction posting. So if this is a debit amount, in the cash or bank account, which it will go on the credit side. So this is a credit side amount which will go on the debit side of your cash or bank account. So this is with respect to step number 2 that you need to remember. The next one is, here you have partners capital account. That means whatever the amount that you are going to find out or you are going to get, this will go in your partner's capital account. Likewise, if there is any asset that is being taken over by the partner, this amount will go on the debit side of partner's capital account. So just the opposite direction you will be doing the postings in partner's capital account. Then step number 4, you can observe there is cash or bank account which is written on the debit side. This will reflect in cash or bank account on the credit side. And there is a last point, or, okay, in step number 4 you will get any one scenario, you will not get both the things, okay. So let us say if the realization expenses is being paid by the partner, so you will write it as partner's capital account. A debit balance will now reflect in partner's capital account on the credit side. And the last part is realization profit or loss. If this is realization profit or if there is a realization loss, we are going to share this in their profit sharing ratio, which will reflect in their partner's capital account. So if it is a loss, this loss you will write it in partner's capital account on the debit side. If there is a profit, this profit will reflect in partner's capital account on the credit side. Next, I am going to explain to you on how to prepare partner's capital account and as well as cash or bank account. For this, students, if you simply follow the realization account, okay, and you follow carefully the balance sheet, preparation of partner's capital account and cash and bank account is going to be very simple and easy. The reason is because half of the problem or more than 80% of your solution is in your realization account, and whatever that is related to cash or bank or partner's capital which is there on debit side or on the credit side, the same amounts will now reflect in your partner's capital. Preparation of partner's capital account. So first and foremost, from the balance sheet you need to bring down the capital of the partners, which will be written as by balance being brought down. The next information is look for if there is any general reserve or reserve fund which is given in the question. Reserve fund or general reserve, distribute everything in the profit sharing ratio. If there is profit and loss account, so write it on the credit side as profit and loss account. This is what is reflecting in the liability side of the balance sheet. If it is on the asset side of the balance sheet, then you need to write profit and loss account. For you to understand the asset side of the balance sheet, distribute in their profit sharing ratio. So this is with respect to balance sheet. Now from the realization account, you have some important postings that you have done with respect to partner's capital account. So that we will write it. First and foremost, if there is asset taken over by the partner, any asset taken over by the partner written on the debit side as realization account, in bracket asset taken over. If liability is taken over, the opposite direction. So realization account, in bracket liability that is being taken over. So in the example I said that C is taking over the motor vehicle, then you will write the amount only in C's amount column. A is taking over the wife's loan, the liability, so you will write it only in A's amount column. So you will see who is that partner who is taking over the asset or liability. In the respective amount column, you need to write the amounts. Then, if there is any realization expenses which is taken care by the partner, now such things should be reflecting in the realization account. So, in that case, realization account, this is realization expenses or dissolution expenses. To the respective partner, write the amount. The last one is you are doing what you call it as realization profit or loss. Okay, that will reflect again in your partner's capital account. So if there is any profit, so you will write it as realization account in bracket profit, which you have already calculated in realization account. So directly write the amount. If there is any realization loss, so write it as realization loss, which you have already calculated, write it directly in the partner's capital. Partner's capital account, students. So at the end what you have to do is you need to do the balancing for each and every partner, just like how you have done in your admission, retirement of a partner. Okay, so in the same manner you will close the partner's capital account. So let's say if your credit side is more, then you're going to write the final amount as cash or bank account. This is the final payment that you are going to do it. Let's say if at all you're going to get the debit balance is going to be more, then on the credit side you will write it as cash or bank account for that respective partner. Okay, this will be reflecting as deficiency made good. The reason is because there is shortage of amount which he has to bring to the business to settle and close the partnership firm. So if credit side is more, you will write it as the final payment through cash or bank account. If debit side is more, you will write it as cash or bank account. That partner has to bring the money to the business. Now, what do you need to make a note of it? Here you have cash or bank account. So whatever the debit amount is there will now reflect in your cash or bank account on the credit side. And whatever the credit amount that is there will now reflect in your cash or bank account on the debit. Students, you need to follow the question to prepare cash or bank account. If they have given both cash balance and bank balance, see which amount is more, that account you need to prepare. Okay, so now I will keep in mind that let us say if there is only cash account or bank account which we need to prepare. This is the last and the final account. So first and foremost, in the balance sheet they will give you cash or bank account balance. You need to bring down this balance first in the cash or bank account, which will be written as to balance bottom. This is very important. So first you are going to bring down the balance from the balance sheet. Next you are going to follow the realization account. We will follow from the debit side. The first item is the liabilities that are being paid. So what you will do it? You will write it as by realization account, liabilities paid, whatever the amount that you have, you will write it in cash or bank account. The next item on the debit side is realization expenses. So write it as by realization account, nothing but the realization or dissolution expenses, write the amount. These are the two things on the debit side. Now on the credit side you have the assets being realized, which will write it on the debit side of your cash or bank account as to realization account, nothing but assets realized. Nothing but you're selling the assets, you have gotten value, that amount you're going to write it on the debit side of your cash or bank. Now, you need to follow the balance sheet. if there is any partner's loan. Now in my imaginary question, if you observe students, I have written as C's loan account. I have put an into mark, and the same thing is reflecting in cash or bank account. So if there is any partner's loan, this also need to be cleared off. So in your cash or bank account, you will write it as by C's loan account, whatever the amount that is reflecting in the balance sheet. It can be C, A, whoever, just follow the question, okay. If it is partner's loan account, then it will come in your cash or bank account recorded on the credit. Follow the partner's capital account. If on the debit side you have final payment, write that in your cash or bank account as by partner's capital account. This is going to be your final payment. Okay, write whatever the amounts that you're getting for example, A, B, C and so on. Let's say if there is deficiency, which will reflect in your partner's capital account on the credit side, that amount will be written on the debit side of cash or bank account as to partner's capital account, okay, which will be written as deficiency made good. See, whoever the partner has got a deficiency, that partner will bring the amount to the business. So with this, we will complete cash or bank account. You need to do the balancing. Okay, when you do the balancing, when you do the totaling of both debit and as well as the credit, you're going to get a equal amount. So with this, students, you should be able to prepare step number 1, realization account, 2, partner's capital account, 3, cash or bank account. So what I would like to say is, follow the format and listen to this video, which will be very helpful for you, because from the next class onwards, we will be working out the 12-mark problems under the heading Dissolution of a Partnership Firm. Thank you.